Can you just speak a little bit about the panel that we just had? What were the main conclusions that we drew from the panel?
I think one of the key bits was that the supply of transactions is clearly at a very low level, and therefore that's leading to an enormous amount of competition in the loan markets in particular for deals, and therefore you're seeing things like leverage still getting stretched for the best credits. We talked about 6.5 times in excess of people pitching, and price compression, so the reverse flexes and the down with the repricings that are going on, CPA Global being one example, and then also dividend recaps also coming out because there isn't the supply of new deals, and then obviously there have been a couple of examples of those, and there was an expectation that there's going to be quite a few of those more in the pipeline as before Christmas comes along.
And what do you think is the appetite from the buy side for dividend recaps?
Yeah, I think it's there. It's a supply and demand market, and if it's a credit that they like and it's a credit that they're in, and the factors are good, i.e. the leverage isn't too high, it's a sponsor they like, the management team's motivated, it's shown it can de-lever, all those sorts of things, then absolutely there's definitely appetite there to roll into paper or even buy more paper in that asset. Yeah.
And Eva, you mentioned before that we're seeing very highly levered deals again being pitched. Do you think that there's appetite for those deals too?
Yeah, absolutely. I think it's all about credit differentiation. As I think I said, the top 10 to 15% of credits, I think, can pretty much do, as long as within bounds of reason, they can do what they like. I think it's a very different story when you get into the mid-sector where people don't want to push leverage, and obviously there's also a string of restructurings at the bottom that obviously people won't do. But for those top credits, yeah, absolutely, I think you can really push it, yeah.
And how about the margins? Where are we seeing margins now?
I think we've now seen euro margins come sub 500 for B loans. In a few cases. I'm not saying that's the norm, but certainly 500 has come down from 550. There's a few that are at the 475 level. And then for dollar tranches, you're now down to 400, right? And because in the States you can get 375 for a B, which is, it's indicative. It's pretty good. It's indicative of where the market is. So and now that may be a window, as we discussed on the panel. That may not continue, particularly as the CLOs come to maturity. So there is a definite imbalance at the moment, but hopefully, that will continue for at least into the first half of next year.